Well, winter implies that there's spring and summer one day, but it's not entirely clear that we will go back to the kind of valuations that we saw in the past, right?
Governments and regulators around the world continue to decide how crypto should be regulated locally and internationally. But is uniform international regulation across the globe a good idea? Can it be done? Should it be done? Thanks for watching.
Well, with the Federal Reserve slowing down the pace of rate hikes, that's perhaps contributing to the rebound we've seen so far this year in crypto. I decided to check in with Tobias Adrian, Director of Capital Markets and Global Monetary Policy at the International Monetary Fund, to get his take on crypto and monetary policy. We kicked off the conversation asking about whether the Fed's current policy path to raise rates to a peak of 5 to 5.25% makes sense given that financial conditions have started to re-tighten and the market is now more aligned with the Fed. Take a listen.
We came out with our forecast for the global economy, but also for individual countries, including the US, just about 3 weeks ago. And, we do see a decline in inflation later this year. We do see a bottoming out of activity, but our forecast is much closer to what the Fed had forecast rather than the much more optimistic forecast that was embedded in markets.
I want to ask you what Fed policy, monetary policy means for crypto. Clearly, the Fed has signaled that it's not going to cut rates this year, really wants to avoid the scenario of the 1970s when inflation resurged and they had to go back in and hike rates further. What do you think this means for the crypto outlook? Does the winter continue, or given that the Fed is beginning to slow the pace of rate hikes and looks like it could hold at some point here later this spring or summer, does that offer some optimism for the crypto space?
Well, winter implies that there's spring and summer one day, but it's not entirely clear that we will go back to the kind of valuations that we saw in the past, right? I think there is like a realization that some of the structures that were out there, don't work. A number of products just imploded, right? They didn't work once asset price or valuations in cryptos went down. And so that is one fundamental challenge. The second fundamental challenge is that, of course, the regulatory landscape is changing, right? I mean, there's a concerted effort by regulators around the world, led by the FSB, the Financial Stability Board, which is also housed in Basel, to have a comprehensive, coordinated, and coherent regulation for crypto around the world. We've seen some elements of that already. The Basel Committee came out with capital requirements for banks holding unbacked crypto assets. And those are, very high requirements. Because the sector is viewed as being somewhat risky. And then, of course, around the world, everybody's watching what is happening with stablecoins, what stablecoin regulations are going to be. And, most recently in the US, of course, the Fed, didn't provide access to its system to some of those stablecoin providers. So that is also very much at the forefront of policy at the moment.
The upside to regulation is you have entities watching after your crypto. The downside to regulation is you have entities watching after your crypto.
But are investors still vulnerable to some sort of major bankruptcy or collapse in the crypto space at this point?
That is very difficult to exclude, right? Because the majority of products are not regulated in the way in which traditional financial institutions are regulated, right? I mean, there's very little prudential regulation. There's very little investor protection. There's very little assurances of how customer assets are being dealt with. And many entities are operating out of offshore jurisdictions, so they might not have the same protections that you would have if these entities were based in the US. So it's difficult to exclude that we couldn't see further disruptions, collapses, or worse.
Mm-hmm. And you mentioned the Fed turning down crypto bank Custodia's application to become a member of the Federal Reserve System. As part of that, they came out with a policy statement a couple of weeks ago, trying to make clear that both uninsured and insured financial institutions are both subject to the same limits when it comes to crypto, namely that banks cannot hold crypto as principal on their balance sheet, but they may act as custodians. Do you think that the Fed is trying to box crypto out from coming into the traditional financial system?
Right. It's a certain degree of making sure that the banks are not sort of like exposed to risks that are very difficult to control. One of the things, one of the deciding factors that the Fed cited in some of those decisions was the difficulty to enforce anti-money laundering laws, right? I mean, you must be able, as an institution, to make sure that what's going on is legal, right? Is and that is very difficult to do in a world where transactions are fundamentally anonymous, and so that's a fundamental clash in between, traditional banking regulatory approaches and the crypto world. And it's I think regulators will not be at ease unless there's a solution to this anti-money laundering and terrorist financing problem. So basically, making sure that so banks, spend a lot of resources making sure that their transactions are legal, right? And that is just fundamentally at odds with the design of crypto.
Thank you for watching, and we'll see you next time.